the universal MACD and the universal oscillator. The price line, the volatility stop, those are all free indicators you can get elsewhere anyhow. Session median, that's pretty simple. And then the rest of these oscillators. So we have the slow RSI, the stochastics, which is the same as Ninja's stochastics, except we allow for smoothing the input. So that's what the universal oscillator and the universal MACD does, is it allows you to select multiple different indicators from within this one indicator. So these are all the different types of MACDs. You have the MACD gapless, which only works with the EMAs, so you can try to change this, but it won't change. And then you have the MACD BB lines, which is everybody's favorite. And then, of course, you can put that inside of Divergences Pro, which will plot, if you elect it to, if you set it to, will plot the up color, down color, little dot on top of that, which looks pretty fancy schmancy. And then you've got the 310 oscillator, which is just another MACD with simple moving average instead of exponential, but does have a bit of a unique average calculation. And then you can change the average. I don't know if you can actually change the average of the yeah, I guess we can. Okay, cool. Yeah, so it allows you to change the type of moving average to whatever you want. You can set it to a volume weighted moving average, which is pretty cool for tick charts. And then normalize the output. So normalization is to make the scale similar across all charts and instruments. So if you put a MACD on, say, the 6E 1 minute chart, you'll have a 0.000000516 scale, and then you put it on the FDAX or Bitcoin, and you have like a 100 or 200 scale. So to unify that across all instruments and time frames, charts, chart types and periods, you can set this normalize output to true, and it will normalize the output according to the percentage of the average range. Okay, so that allows you to use the same exact settings inside of Divergences Pro for all charts, periods, types, and instruments. So that was one of the tricky things for making divergence, making an algorithm that's kind of unified. Where the settings are similar across all chart types and periods and instruments. That was a big hurdle to overcome, and we could do that using a similar method with a z-score, which is to plot the indicator inside of a standard deviation, which is almost like putting Bollinger Bands, pulling the indicator into Bollinger Bands with a period of like 500 bars, which would then normalize the scale in standard deviations above and below the mean of 0, but it would also alter the actual plot. So if I put this now in a z-score, you might see that this little low, these couple of lows here, maybe that low inside of the z-score is actually a little bit higher than the previous low. So the z-score is nice. It's really pretty cool for stuff like balance momentum. But when you start putting it on like MACDs and stuff with a little bit larger period, then you can see the output start to change a little bit. You can overcome that just by increasing the look back. But the z-score is a little bit of a heavier calculation. I mean, we're talking, microseconds, but it does require a bit more calculation, a little bit more CPU. So rather than using the z-score to normalize stuff like MACD and any sort of unbounded oscillator where the scale is dependent upon the instrument's price and the distance in price from one bar to the next, rather than doing that in the z-score, we have done that externally using this output normalization here based on the average range. So that removes some of the calculation requirements, and it also makes it to where the scale is unaltered. You don't have any change in the plot whatsoever. It maybe I should word that a little bit differently. It normalizes the scale without affecting the plot. Okay? So the plot will look identical to the same indicator applied without that normalization. The only thing that this changes is the actual scale, so that you can use the same exact settings inside of Divergences Pro on all charts and instruments. Okay? So that was the main purpose of this, and then we just took it 20 steps further, which I can't help but do with everything.
So Dan, what is the default oscillator then?
Yo mama. Balance momentum.
Oh, it's balance momentum still. Okay.
Mm-hmm. That's for the universal oscillator.
No, that's inside Divergence when you open up the templates that you sent us.
Yeah, balance momentum.
Balance momentum.
And you can find that here under 1B. See, it says universal oscillator. You click on that, and that opens up the pop-out user interface here. So that is set right here, calculation mode. And then I could use a moving average of the balance momentum, or I could use the difference. So we added an average for all of these calculation modes, which each calculation mode is essentially a unique indicator. And then we also added the difference between the primary plot and the moving average, which is what MACD does, which is what that little histogram is right there. That's the difference between the two. So you can really, with this universal oscillator, universal MACD, you can create your own indicator, if you will. You can alter the input that's actually used to create the indicator. You can set that to one of these, 9 different moving averages? 9 or 10. And let me just think for a second. Yeah, the volume weighted moving average doesn't work for some of the input smooths because that affects the actual sorry, not the input smooth, but the output smooth. Okay, you can smooth the input using any of these, but the output is the actual smoothing of the finished product, so the plot. So for instance, let me just plot this. Let me show you what I mean here. Yep. You see this is balance momentum. And balance momentum it's essentially for all intents and purposes, it's the standard momentum indicator. It's looking at the speed, the distance and price per bar. Well, it's essentially looking at the difference between the current bar and whatever the period is, 14 bars ago. It's looking at the change. Okay, it's the same as rate of change. Rate of change is momentum in percentage. So it's whatever. I'm not going to try to explain the calculations, but balanced momentum removes that period 14 bars ago, whatever the period is set to. It substitutes that value with an average value. So for instance, if you have a massive bar that's 13 bars ago, and then on the 14th bar, once it becomes the 14th bar, you get a change, and then once it becomes the 15th bar, when that giant bar is removed, it can skew the scale. So you could actually see momentum move down, even though the current bar is moving up. It's kind of a funny subject, but anyway, that's why we use balanced momentum instead of the normal, the standard momentum equation. But anyhow, so this is the standard plot here.
It makes sense. So then if there's one bar with extreme volatility, it doesn't throw off the whole balance momentum.
Exactly. And you can compare the balanced momentum to the actual standard momentum and put it on a minute chart where you've got some high volatility and just kind of look at the nuances between the two, and you'll see that drop out. The problem with the really wide range bar that drops out of the period, how it skews the current value. So what we can do now with the universal oscillator is we can smooth the actual output. So in this case, we have balanced momentum in the bottom with no output smoothing, and then we have balanced momentum in the panel above with a 2-period SMA smoothing. So that's the output smooth period. If I set it to 2, you'll see it'll now line up with the one above it. See? And then I can set that to 10 and get a really smooth plot. And I can even smooth the input, which is replacing the closing price or whatever we set for the actual input series here. It's replacing that with a moving average. So now, rather than using the closing price of the bars to measure momentum, we're looking at the difference of the SMA 3 relative to the value 14 bars ago. You see? And that smooths it even more. So this is without output smooth now and only a 3-period input smooth. And now I'll set it to 10. You see? So it's 2 different types of smoothing. You can smooth the price bars going into the indicator to create the indicator, to create the plot, or you can take the created plot and smooth it, which is smoothing the output, or you can smooth both. And you can do that with one of 9 or whatever, how many different moving averages we have there. So for the input, you can use the volume-weighted moving average, but for the output, you cannot. See,
I can understand doing it for the output, but why would you want to do it for the input?
why ask why? Why not just enjoy it and say, thank you, Daniel? I'm just kidding. Yeah, I don't even know. We just added it in there. I guess it depends on, well, like this. Okay, so there are, let me show you. There's a lot, you know, people do their little spin-offs of these different indicators and go on to call it something like Awesome Oscillator, which is just a MACD with a different period. But one way in which they do create some things that are a little bit unique and potentially useful is to take like the input of an RSI, for example, and rather than using the difference in the relative strength from one bar to the next, replacing that with an average, so that the plot is a little bit smoother. I mean, this is something you would use, the input smooth is something you would use, for example, if you were actually using this as a trigger type of a deal, Chris. You know what I mean? Like if you're looking for the plot to cross over an average or something, and you want a plot that maybe isn't as reactive, doesn't jump around back and forth. So you can essentially, so that from one bar to the next, it doesn't affect the plot as much until, you know, price is kind of completely turned. How can I say that more succinctly? You understand what I'm trying to say?
Yeah, I was just getting at just whether you were using it for a specific reason, that was all.
No, it's just that some of these indicators that we were adding in here, we basically went through Ninja's list, or I did, and sorted out all of the ones that might be useful for the divergence. And I was originally going to include these universals with the divergence analyst only and not make them free. But then, yeah, I don't know, I decided to make them free. So some of the ones that we've included were some custom ones that we had, such as the slow RSI, the stochastics momentum index, the derivative oscillator, and the directional trend index, which William Blau wrote a lot of these, like the directional trend index, the stochastics momentum index, which he wrote those specifically for divergence. He's got a book on divergence analysis. It's like one of the oldest, I don't know, it's basically like an encyclopedia of divergence analysis and stuff. So he wrote these specifically for divergence, and they all have this input smoothing built in. So in order to make a universal oscillator that could include those, we either had to expose the input smooth or just hide it and not allow it to be used. So we just made it to where you could use it for any of them. And then we had to rebuild some of the standard NinjaTrader indicators, like the TSI.
You're missing one.
Which one?
It's the Oscillator.
Oh, the Oscillator.
Indeed.
The awesome Oscillator. So we had to rewrite, like, well, let's see which ones we had to rewrite here. We had to rewrite, oh, by the way, we have the auto fib retracement for NinjaTrader 8 now as well, which I'll release probably tomorrow. All those free indicators. These are just moving averages that we're using inside of the smoothing. We had to rewrite the MACD to be able to handle the moving averages types that are used. And then the MFI, which is, I think, the money flow index, which does use volume to some extent. I think that's what it is, money flow index. Tushar Chandy or something wrote that. I think, I can't remember. The PPO is it's another MACD, but the output is in percentage. The PPO is to the MACD what the rate of change is to momentum. Rate of change is output in percentage. PPO is output of the MACD in percentage. And then I think just the stochastics and the TSI after that. So yeah, we had to update those to allow for changing the moving average type and the values of some of these smoothing periods. So with this, you can essentially create quite literally anything you want as far as, anything that uses price as an input to try and make sense of the price action. So the ones that I find the most useful that are actually going to give you some data that is meaningful, that you can actually glean some useful information about the price action leading into the swing high or low, would be stochastics, momentum, the TSI, RSI, rate of change is the same as momentum of course, and then DMI is interesting. I just haven't spent very much time with it. I mean, we're talking about oscillators here, so. But these are the ones that I would say you could use. How do I say that? These are the ones that I found some value in, and then we added like the RSI gapless, and then for the MACD, the gapless normalized MACD. So we removed the normalization from the individual indicators and put it here globally so that you could actually normalize any of those unbounded oscillators. Unbounded means there's not a fixed upper or lower limit. Like for stochastics, you have 0 and 100. RSI, you have 0 and 100. What else is bounded? TSI is unbounded. MACD is unbounded. Directional trend index is unbounded. So everything that is unbounded, you can normalize the output. Obviously, if the scale is bounded, then you don't need to normalize it. But for everything that is not bounded, you can normalize the output. And then you can substitute the smoothing averages. So it's pretty neat. It's it was something that I wanted to do for the balanced momentum anyhow, and this just makes it a bit more efficient and gives you more options, and just another tool that you guys can use that I'm obviously not charging anyone for. And then what else? You got the Volatility Stop, which is much nicer now. We had it for Ninja 8 for some of the trailing stop stuff. I think I'm going to end up turning this one into a sort of like a universal trailing stop type of a deal. But that will likely be in January, so that we can have like super trend type of a thing. Be able to modify the smoothing averages there. Have a standard deviation. See, this one's based on average range, average true range, or ticks offset. And then something like the super trend would be based on a number of different things, mostly average range or average true range, but I think you can use standard deviation and a couple of other options. So this volatility stop doesn't have a lot of leeway with what you can do. I mean, the look back period is just for the average range. It doesn't really affect the size of it per se. That's all controlled by the offset value and whether or not you anchor the donkey in. This is a little bit tricky to explain, and you won't really notice much difference with this set to true or false. A little bit of difference, but not too much. And then the trailing values, which means that if it's moving down, if the plot is above, if this is set to true, it can only slope down. It can never slope up. See, if I set that to false, it can slope up and down, but there's a, oh, that's set to ticks. Okay. Yeah, see how it slopes up right here? So that is disallowed when that's set to true. But anyhow, with something like the super trend, you can make it really huge. You can increase the look back period of the actual average and not just the average range. But anyway, all this stuff is free. No machine IDs. You can send it to whomever you want. I don't care. This little auto-fib retracement's pretty neat. It's one of the first things that I added 4 or 5 years ago as a free download. And then we updated that for Ninja 8. So everything that we have here for the free indicators, we also have in the NinjaTrader 8 platform. We updated the counter. So I've got everything nice and neat, organized. Properties are a little bit more concise, succinct, a little cleaner, nice and neat. Properties descriptions, the alerts and the flash is all working properly again for the counter. We added the same alert functionality in Ninja 8 with the chart flash as well. That'll be available tomorrow again. The average range I updated. Nice and neat, see? Nice and clean. Shows you the 3 values of the 3 different average ranges and then highlights the largest one in red there, or whatever, crimson. And the chart label, of course, which is pretty cool. You have this now where you select whatever from here. This is kind of the way NinjaTrader 8 does it. And then it adds that to this property. It's pretty neat the way that that works. Determine period, I guess I already had that. Oh, yeah, sorry. And what else? Price line, just that simple horizontal line at the current price. I think that's pretty much it, guys. Anybody have any questions on this? Since everything was breaking, the readers had to break again, unfortunately. It broke all the previous workspaces and templates if you had the any of the readers in use in any Bloodhound templates or workspaces. So we changed the name of the indicator reader once again and just made it the replicator. So now it's, it's a reader. So rather than being up here, indicator copier, they're all grouped together now. So you've got all the individual readers, which give you the signals from all the different charts. Then you have the reader manager, which controls them all. And then you have the overarching replicator, which takes the system that all of these are based on, but then allows you to actually copy indicators from one chart to the next at the bottom of the list. So I'll try to make everything nice and neat and organized. Session median is another one. In Ninja 8, this is quite a bit better. You can plot it like a single horizontal line at the current price of the midpoint of the day, kind of like the price line, or you can plot it across the whole, like a normal plot like it does now. So that's a little bit different in Ninja 8. All right, thanks you guys. I'm going to shut it down and I'll talk to you in the morning.